From an increase in private sector credit growth in the wake of declining interest rates to a dip in export earnings, we bring you the latest economic updates for the month of October 2023. Hi, I'm Vinodini Rajapupati and welcome back to the First Capital Monthly Economic Watch. In October 2023, the IMF reached a staff-level agreement with Sri Lanka under an economic reform program, marking the completion of the initial review for Sri Lanka's second tranche. Upon the approval by the IMF, Sri Lanka will gain access to approximately $330 million in financing, bringing the total disbursement of IMF financial assistance under the arrangement to approximately $660 million. The IMF Executive Board's review completion requires the authority's execution of all preceding actions and the completion of financing assurances reviews, which will involve verifying the adequate progress in debt restructuring to instill confidence that the restructuring will be completed promptly and aligns with the program's debt targets. Moving on to the government securities side. The secondary market opened the month on a bullish note driven by optimism surrounding expectations for a policy rate cut. As weeks progressed, investor sentiment shifted to a more cautious stance, awaiting clarity on the future movement of interest rates leading up to the first T-bill and T-bond auctions post the monetary policy meeting. In the initial bond auction for October, CBSL fully accepted bond auction maturities 2026 and 2030. Subsequently, in the second bond auction, with an expected raise of LKR 45 billion, CBSL fully rejected bids for the bond auction maturities 2028 and 2031. Following these developments, market activities exhibited mixed sentiment, with interest largely centered across short to mid tenors, particularly the 2025, 2026 and 2027 maturities. During the bill auction, there was a decrease in weighted average yields across the board, with one-year bill lowering below 13.05%. In line with this, finance sector rates, including the AWPR, decreased further and recorded at 13.86% towards the end of October, while interest rate spread declined to 1.1%. Moreover, private sector credit increased by LKR 69.8 billion compared to August 2023 due to the continuous dip in rates. Meanwhile, state credit registered a second consecutive month of decline by LKR 253.7 billion relative to August 2023. On a year-on-year basis, private credit recorded a decrease of -5.4%, and on a month-on-month basis, it is an increase of 1%. Looking at the inflation figures for the month of October, inflation slightly increased after 12 months of consecutive decline to 1.5% year-on-year, while month-on-month inflation marginally decreased by -0.2%. Year-on-year inflation of food group remained stagnant at -5.2% in October 2023, while non-food group increased to 4.9% in October 2023 from 4.7% in September 2023. Analyzing the month-on-month inflation, the CCPI index decreased by -0.2% month-on-month, contributed by the decrease in expenditure of food items by -0.63% and an increase in expenditure of non-food items by 0.41%. Within the food items, decrease in value changes were mainly reported for fresh fish, fresh fruits, chicken, potatoes and ginger. Among non-food groups, increase in value changes were mainly reported in housing, water, electricity, gas and other fuels, transport, miscellaneous goods and services, and health. Looking at the NCPI for September 2023, NCPI contracted to 0.8% year-on-year compared to 2.1% in August 2023. Meanwhile, foreign reserves increased by USD 22 million from September 2023 to USD 3.6 billion in October 2023. Also, market liquidity gradually declined and turned negative during the month of October 2023. In terms of the government securities, there were LKR 584 billion worth of maturities during October 2023 and new issues through auctions worth of LKR 784.1 billion, creating a surplus of LKR 200.1 billion. Also, CBSA holdings remained stagnant at LKR 2.8 trillion as at the end of October 2023. Moving on to the external sector performance, trade deficit expanded and recorded at USD 378 million in September 2023 compared to a deficit of USD 205 million recorded in September 2022. In terms of exports, earnings from exports declined by 10% in September 2023 to USD 971.7 million due to a decline in earnings from industrial exports, including garments, associated with slowing external demand. The decline in earnings from industrial exports were mainly due to the decline in earnings from garment exports to most of the major markets, while there was an increase in export earnings of petroleum products due to the increase in the volumes of bunker and aviation fuel exports. In terms of imports, import expenditure increased by 5.1% year-on-year to USD 1.3 billion in September 2023 as the rise in import expenditure was broad-based and was primarily led by imports of consumer goods and investment goods. Workers' remittances increased to USD 482 million in September 2023, increasing by 34.3% year-on-year, while earnings from tourism for September 2023 increased to USD 152 million from USD 41 million in September 2022. Accordingly, BOP for January to September 2023 recorded at USD 1.9 billion compared to January to August 2023 amount of USD 2 billion, resulting in a net outflow of USD 171 million for the month of September 2023. In terms of tourist arrivals, the total arrivals for the month was recorded at 109,199, displaying an increase of 159.8% year-on-year compared to October 2022, owing to factors such as the ongoing recovery of the tourism sector and improved socio-economic conditions. However, during the month of October, a reduction in arrivals was observed, reflecting a 2.4% decrease compared to September 2023. This decline is likely associated with a gradual decrease in arrivals from key source markets including India, China, Australia, and Israel. In terms of the currency movement, although LKR depreciated against the USD on a month-on-month basis and stood at LKR 327.4, on a year-to-date basis, the LKR strengthened against most of the major currencies, including the USD, sterling pound, and the euro, supported by improved socio-economic conditions. Finally, moving on to the global market, a negative sentiment persisted as most major indices were seen in the red zone during the month. So with that, we conclude the monthly recap for October 2023 and stay tuned for more updates in the future. Thank you.